What's going on, good people? Welcome back to day 5 of the journey to getting funded. Today is September 28th, 2023. We made some trades today, so let's get into it. So first and foremost, let's talk about the important levels that we have on the chart today. So we have yesterday's closing price at the purple line right here at a price of 33,804. So let's go ahead and get into this session and break down what exactly happened and what I learned from it. So let's talk about trade number 1. Right here. So let's start right here at trade number 1. So at trade number 1, I shorted here expecting for resistance to hold. Now this wasn't the highest quality setup right here, and I say that because for one, we had a large move to the downside, which is cool. That's what I like to see. So anytime I see that, then I start to look for the next move to the downside, which means that I need to look for short signals that come into the market. Now, if you look at where we were at, we were coming into a level that acted as pretty much an area of support for, this was 851 right here. So at the time when I took this trade, this had been support for about 45 minutes. So for me to go short right here towards the lows, that just wasn't the best idea per se. And when you look at where we were at, we had yesterday's closing price not too far above. And then we also had top side resistance from these candles right here at around 788. So I could have either decided to short from the top level of that swing that we had just established, or maybe potentially shorting from yesterday's closing price if we were able to reach it. Now, where I shorted from, I shorted towards the lows of support, which if I had a wider stop, I would have been able to actually hold that trade and catch this move down. But because I trade with tight stops, I have to make sure that my entries are on point and they have to be on time. They can't be early, they can't be late. So right here, I was just a little bit too early. So I think going forward, what I need to do is just be a little bit more patient, or just don't take the trade at all until you see something that's so clearly obvious that it has to be taken. Trade 1 was more of like I feel like it could be right, so I want to take it type of trade, but I need to wait for a lot more confirmation so I can be I have a higher probability of actually, making some profits on that trade, because that's the overall goal. And as we see, eventually the market did break back down and come all the way back down, not only to the level that was support for today's session, but it broke past that and created a double bottom. Now, after we created this double bottom, I was looking at this one specific turnaround point right here, because it's not up here right now, but during the session, I actually had this drawn up as a higher low. So I have my circle around it. And when it comes to the higher lows, I like to either go long as prices come back into that support level and see them continue up, or if they break past that support level, I expect for that support level to become resistance, and then I want to short as prices come back up into that level. So if we look at the low for that candle where the higher low was created, the low for this candle was 726. So I'll put my entry 3 points below at 723, expecting for prices to come back up into this level and then sell back off and see the downtrend continue. But looking back on it, if we read the notes, it says the double bottom below made this setup less likely to happen. And that makes a lot of sense, because a double bottom means that usually you have some buying momentum down there. And even though I have seen scenarios where a double bottom has been rejected after it got formed, that happens like few and far in between. It's more so the exception rather than the actual rule. So just as a rule of thumb, you don't want to necessarily go short off of a double bottom until you see clear signs that the double bottom has become a failure, meaning that maybe the double bottom came back up to the apex right here and then sold off and got back down to where these equal lows were down here. So maybe that would be a scenario where you want to short from, but not in this scenario that we were looking at today. And then when you add in the fact that this blue line represents the lows for that session so far today, it's like, wow, Ty, you kind of shorten near the lows against the double bottom. Now you have two things working against you, which just makes your trade less likely to be successful. And that's exactly why I got stopped out right here. So then we see prices continue higher. We made a higher low right here. I circled that up, drew it as a level of support across, which came back to make a difference a little bit later on, but we'll get into that a little bit later. So we pushed all the way back up to yesterday's closing price. Now right here, we created a fair value gap. Now, when it comes to fair value gaps, I was telling you guys the other day about how I used the fair value gap for the first time and how I first started learning about fair value gaps this weekend. And what I've actually picked up and noticed is that anytime I learn about a new system or a new way of trading in the market, when I come into the market that next week, that's all that my mind can really focus on, because it's such a fresh thought and my brain is pretty much just like, do it this way, Ty, do it this way, do it this way. But that's not the mindset to have. It's cool to learn new ways to expand your trading and learn new methods and things like that. But you got to make sure that you take these things and you work them in practice to the point where it's almost second nature for you to trade using a fair value gap. For me, this is not second nature. A fair value gap is very new to me, and it's a method that I've seen other people use. So I'm like, okay, I know it works, but it hasn't been working for me because I haven't put enough time in and studied it enough to be confident to take the right trade. So, I ran into some trades a little bit later on that were kind of hovering and centered around this fair value gap, and they didn't go my way. So we'll talk about that a little bit later too, but I just wanted to bring that up real quick. So after we create this fair value gap, we come back, retest yesterday's closing price. We form a higher low on top of there, push back up and hit the top level of resistance that we really hadn't been able to break through all day. So this orange zone that we're looking at right here was the original top side level for the trading range that we were in today. And then prices kind of pushed up a little bit at 8:30 when GDP came out and created a new extreme for the top of the range. And once we got there, we pretty much held up at that level for the next, so this was 10 o'clock, and then we didn't break out of there until 11:23. So for an hour and a half, that was resistance. So once we hit that top level, we came back down, pushed back through the zone, and then we came back up to retest the zone. So what I was looking at right here that led me to trade number 3 was the fact that I saw this lower high right here, and then I saw prices break out of the zone. So I'm like, okay, that's 2 selling signals right there. We're coming, well, actually 3, because we hit the top side level of resistance. We sold off, created a lower high, broke back down through the resistance zone that had been holding up all session long, and then came back to retest it. So I'm like, okay, that's 3 signals right there that tells me to get short. So I did, and that was a great entry. The only problem was, if we read the notes, it says it was a good entry, but I got greedy and I didn't lock in my profits. My normal scalp target is around 21 to 25 points, somewhere in between there. Whatever I can get, that's what I'll take. So what I've been learning is that it's better for me to come into the market and secure my scalp targets first, get that cushion, and then start trading and looking for bigger targets. So I think today I came in with the mindset of get the bigger targets first and then work on your small scalps here and there. But really it should be the opposite. Start small and then go big. And I think that's the mindset that kind of threw me off right here on trade 3, because I shorted right here and I saw that yesterday's closing price was right down below. So it would have made sense for me to get out right there, right? But then I also started looking at that fair value gap. So I'm like, you know what? If we tested the top of resistance and we broke past the zone, we should be moving back down to the fair value gap, right? Which, I mean, that's a good way to think. It makes sense based on what the market was doing at the time. But even still, with that being the case, my first mindset should be to always lock in those scalp target profits first. If you don't catch the big move on this one, you can catch it on the next one, but you can always catch that scalp target trade. And I think catching my scalp targets, it just does something for me mentally, because if I would have taken this trade, it would have brought me back to break even for the day, because trades 1 and 2 net put me down about 25 points. So if I would have took my scalp target on this one, I would have been back to break even. And then I feel like my whole mindset would have been different, because I wouldn't have had so much pressure on my shoulders. I would have been able to take a deep breath and say, okay, we made it back to break even, Ty. Now, how about we make some better decisions going forward so we can end the day in the green, in the profits, right? So that could have been what happened right there, but it all comes down to the decisions that you make. It's always potential for you to do the right things, but it's also potential for you to do the wrong things. And that's what free will is all about. The decisions are up to you. And right here, I made the wrong decision by not taking profits. So it's a tough lesson for me to learn, but it's a lesson that I learned nonetheless. So after that trade comes back to break even, we see prices come back up, create a higher low on top of the zone, come back up, hit resistance, and get rejected. Now, the move that I thought was going to happen on trade 3 actually happened on this push down from resistance right here, but I didn't participate because I didn't get that retest of the zone that I was looking for. So my idea instead was, I was thinking that if we came back down to this level before, more than likely if we come back down there again and we push past it, we should come back up to that level, retest it, and then sell off. So therefore, once prices got back into the zone, I put my short at the top of the fair value gap right here, expecting for prices to reject from there, because not only did we have the fair value gap, but we also had yesterday's closing price like a couple of points above it. So I'm like, okay, two major levels right there intersecting each other. This should be a good spot for me to go short. But if we read the notes right here for trade 4, this kind of touches on what I was saying earlier, where I was like, look, I need to practice fair value gaps a lot more if I want to use them in live sessions, because, you know, it's not 100% necessary for you to keep expanding your wheelhouse as a trader and trying to find more methods and more strategies that work. If you have a certain selection of setups that work well for you on a consistent basis, you don't really have to think about expanding. You just need to stick to what you know, stick to what's been working for you, and milk those setups until they don't work anymore. Then you can think about expanding your wheelhouse and learning new methods and whatnot. But for me, I use the higher low strategy. I've studied the higher low strategy for who knows how many hours, who knows how many backtesting sessions. I've studied it to the point where I literally have dreams about it, where I'm taking trades and using higher lows and whatnot. So I thoroughly understand and have a very deep level of confidence when it comes to trading a higher low strategy. So when I'm trading in the market, that's what I should focus on, because that's what I'm the most comfortable with. I shouldn't be expanding, trying to do new stuff and whatnot. If I'm going to do new things, I should do new things in practice and get those right until I feel like I'm ready to actually take it to the real life trading session. So right there, I think I'm just trying to move too fast, too quick, and trade 4 was a lesson that taught me that, hey, focus on what you know and less of what you don't. And that goes back to my #1 rule, which is come into the market every day and look to trade your best setups. If it's not your best quality setup, let it go. It doesn't have to be taken. It's kind of like when you're in the airport and you just got off the plane from your flight, and now you go to baggage claim and you're starting to wait for your bags, but your bags are taking a little bit of time, a little bit more time than expected to come up there. So you start getting nervous, like, man, I got an Uber that's supposed to be here in 5 minutes. They not gonna wait for me. They gonna leave, and they gonna charge me for not being able to get into it. So I need to hurry up and get out of here. Let me just grab this bag right here and I'm gone. It's like, whoa, hold on, buddy. That's not how it works. That's not your bag. You can't just pick that up because it's a suitcase. Like, yeah, you need a suitcase, but you need yours, right? So it's kind of like that when it comes to trading. You know, it's all types of setups and trades to be taken in the market, but you got to wait for the trade that's yours. So with the suitcase situation, maybe it was a delay in the airport because the people that were working baggage claim on your plane, maybe they had to go to the bathroom. So it's like, look, okay, they're going to get back to it eventually, but it might be like a 10-minute delay or something. So just be patient and wait for them to get done, and then your bag is going to come right up as long as you can wait for it. So in the market, you need to be patient and wait for your setup, because the market is going to throw opportunities at you all day long. It's somebody in the market that probably made profits on this trade right here, on trade _4, and probably on trade #5 too. But it wasn't me, because those were not my setups. So it's like, hey, it might be a little bit of a delay, but just be patient. Your trade is coming around. We're getting to you. We see you, Ty. We didn't forget about you. We're on the way to double back, but don't try and chase us. We're coming to you. So just be patient and wait for that. So that's the biggest lesson right there. And I talk about this a lot on a lot of my videos, where it comes down to just being patient and waiting for the best setups. I think the other day I said that it's not about the trades that you take, but it's about the trades that you skip, because those trades that you skip are the losing trades that won't work for you, that'll bring your account balance down. So you want to make sure you avoid those at all costs. And that's what I learned right there on trade 4. So then we see prices come all the way back up, hit the top of resistance again, get rejected. So when they come back down, they didn't quite test yesterday's closing price. They didn't get close. I mean, they did get close, but not quite. So then I was like, okay, if they didn't get close last time, they should be coming back this time to retest it. So I'm like, all right, let me put my short right here at the top of the zone. and look to take prices back down to either yesterday's closing price or back down to the bottom of the fair value gap. But if we read the notes right here, it says, I shorted right here as prices retested the zone, and that was a good entry, but I didn't enter from the right levels. And that goes back to something we always talk about, which is you can be right about the idea that you have in the market, about the direction that you think prices are going to go, but you still have to come to the market and pick the right levels to enter from, especially for a trader like me that uses tight stops. Like I said before, I can't be early, I can't be late, I have to be right on time with my entries. And if we look at trade number 5, this trade got stopped out at 33,840. I enter at 33,826. My stop is usually 14 points, so that makes sense right there. But let's look at this candle that I got stopped out on. Look at the highest price for this candle. The high was 33,841. So I literally got stopped out one tick away from the highs, and then I saw prices make their way back down to a level that would have given me at least a decent amount of profit right there at 816. So that's what I mean. This is a great example of what I mean when I say your entries matter so much. It could be the difference between 1 or 2 points on your entry that can be the difference between you taking profits or the difference between you getting stopped out. And this is a great example of that right here. And I had to take and learn a lot of tough lessons today, but I think this is something that'll definitely stick with me. I'll always remember this day because, you know, I'm learning things that are not necessarily new. All of these lessons have already been repeated before in the past. So it's up to me to not make the same mistakes on a consistent basis and just be more focused, more disciplined, and like I said before, more patient. That's really what it comes down to. So after trade 5 got stopped out, we see prices come back up, test the top of the zone, and then shoot all the way back down, not only to test yesterday's closing price, but to test the bottom of the fair value gap, and then come back down to retest this previous higher low that got established right after trade 2. So it's pretty interesting how the market just finds a way, somehow, some way, to come back and retest all of these important levels, and then it decides to go ahead and do what it's been doing before. So after we hit the bottom of that level, what I saw was this large move to the downside. So I'm expecting a second leg. So I said, okay, if the second leg was to start from anywhere, where would it start from? Well, more than likely, the fair value gap. People would see the fair value gap and start either taking profits from there on the long side or start shorting from there on the short side, which should push prices down. And that's cool. You know, I think based on the situation, that was a logical way to think. But it also comes back to waiting for confirmation before you start taking the trade that you think is going to work based on your idea. You can have an idea, but you want to make sure that the market confirms it. And if we look at what I did right here, I pretty much literally just shorted because it hit the bottom level of the zone. I didn't see any other signals that told me that I should go short. I didn't see any lower highs. I didn't see any previous lows getting broken. I didn't see any of those things. I just decided, hey, I'm going to short it right here because it looks good. That's not the mindset to have. You can have an idea, but if the market doesn't come through and confirm that idea to you, you let that go and then you wait for the next best opportunity. So that's pretty much where I went wrong on 6 and 7. Just shorting right here, expecting something that hadn't quite been formed yet. You know, always got to wait for confirmation. That's so important. So then after that, I was like, look, I'm not going to trade anymore until I see my best possible setup, and I'm not taking anything else. So I was patient. I saw the market come back up to the resistance level and then kind of consolidate between that top side level at 867 and the previous zone that we established at 842. So they played within that zone for a good, like, almost 45 minutes. And then they broke out of that level, but quickly came back to reclaim that level of resistance, created a lower high. So then I waited for prices to come back, retest the lows for that lower high, and then I shorted on trade 8. Now that right there, that's my typical entry when it comes to a short trade. That's exactly what I'm looking for. So that was a great entry. But trade 8 was very similar to trade number 3, where I saw everything that I liked. I had a great entry, but I didn't lock in the profits when I had it. Because on trade 8, I think at this time, I think I was down by 800 and what's 90 minus 983. So I was down by around $893. So at this point, I'm like, look, I'm trading 2 contracts, so that's $10 a point. My scalp target right now would get me 20 points, and that would bring me back down to like 693 or something like that. So I'm like, man, that's not even worth my time. That's barely chipping away at the losses that I already took. So what's the point? Why don't I just expand my profit target and at least try and take it back down to yesterday's closing price, right? That's not the idea to have. It's like, look, even though that trade is just going to make a small dent in your losses, you don't know how that trade is going to affect you mentally. Because like I said before, my mind frame when I'm trading starts to change when I hear that cash register ring and I see those profits get locked in. I start being more optimistic. That motivates me to be more patient. And then if I'm patient, I can just take the right trades when they come around. So when it comes down to you working your way back from a loss, don't decline the profits on the trade because it's not going to make back everything that you just lost. You got to chip your way bit by bit until you get all those gains back that you just lost. So don't give up on the small profits that you could easily lock in, because I went short right here at 863. Prices came back down to a low of, let me see, 837 on this candle. So I definitely could have locked in my scalp target 25 points below and had room to run, extra room. So right there, that's just a mental lapse by me. You know, you can't let your emotions get the best of you. You gotta stay focused no matter what the scenario is, no matter how much controversy you're going through, no matter what the market throws at you. You have a plan and you stick to it. Forget your emotions. You can be mad if you want to, irritated, frustrated. Deal with all of that when the session is over. But when the market is open, you got to handle your business and do exactly what your trading plan tells you to do. So after trade 8, I had to call it a day because I was only 17 points away from my daily loss limit. And of course, I don't want to hit that. But what I want to talk about is I know that I need to establish concrete loss limits, because I think I'm good on my winning days. I got that in the bag. That's handled. I can do that on a consistent basis. But my problem is the losing days, because I'll come in after having a 40-point day yesterday and then come in on a day like today and give back 98 points, because I was trading $10 points. I had $983 worth of losses. So down 98 points, that's not good. Like you can't do that on a consistent basis and then expect to be profitable. It just doesn't work that way. You know, it's kind of like walking out into a rainstorm with no umbrella and just saying to yourself, man, I hope I don't get wet. How is that supposed to work out for you? You know, that's not a very good idea. I don't think that's going to go very well for you. And it's the same thing in the market when it comes to loss limits. You say, I don't have a loss limit, but I hope I don't blow the account. Well, how do you expect for that to work out for you? Because if you don't have a loss limit, you're just going to keep pushing and pushing and pushing until you get to a point where you just got to say, man, that's it. That's all I got. But by the time you get to that point, you would have dug a hole so deep for yourself that it's going to be a very tall task to get out of that hole. So it's better to just not even go down that road and establish a concrete loss limit. So you say, okay, this is the point that I hit. When I hit this point, it tells me that whatever I'm doing is not working. I believe in myself. I'm 100% confident in my trading abilities, but I still have to be realistic about my expectations. How many times have I had a losing day where I was down big and been able to bounce back? It was a couple times that it happened like that, but more likely than not, those days just ended up getting worse. And if I had limits in place, it would have just protected me from my own self. Kind of like when you have an individual trade on the line. You trade with a stop because when prices reach that level, it just tells you that, yeah, you might have thought that you was right about this idea and this trade that you had. But because it got here, that's telling you that whatever you believed was wrong. And I think it comes down to ego. I'm a little bit too overconfident when it comes to my ego because I've studied, I put in work, so I feel like I deserve to make profits. And on the days when I do, I feel validated. But on the days when I don't, I feel like I'm low-key kind of failing at the goal that I had. But failing in the market is literally a part of the process. So you have to learn how to fail in the right and proper ways. It's a good way to take losses, and then it's a bad way. A good way is to take losses up to a certain point and then be able to say, man, it's just not working for me today. I hate that it's not working for me, but I know I'm making the right decision by calling it a day, going back to my back testing session, studying my notes, getting my mind right, and then coming back tomorrow and trying it again. So you got to keep that mindset because it's very important, and it'll help keep your emotions in check and your egos in check, because when I take large losses, it hurts me like mentally, because then I start questioning whether or not I know what I'm doing. And more than likely, when you go back and look at the trades like I'm doing right now, it's like, oh, all of these lessons that I'm learning, I'm not going to say they're easy, but they're simple. You know, I'm aware of all of these lessons, and it's up to me to take accountability and responsibility to do the right things. So when I'm in a better mental frame from not taking larger losses, I have a better chance of making the right decision. So that's why I need to employ concrete loss limits. So for me, I want to make that 3 trades. So my stop loss is 14 points. So that means that 14 times 3, that's 42, which means that the maximum that I'm willing to lose in a day is 42 points. Multiply that by whatever amount of contracts you plan on trading that day, and then boom, you have your loss limit. So for me, that would be 420 since I'm trading 2 contracts, $10 a point. So my daily loss limit should never, ever, ever get above 420. And if I stick to that loss limit, I feel like the sky is the limit, because now that I'm controlling my losses, am I going to be frustrated on that one particular day? Yeah. But when I wake up the next day, I'm going to be very happy that I didn't set myself up for failure on the day before and I made the right decision. So that's the most important thing I learned today. Set concrete loss limits. So on the days when you're not doing well, you can protect yourself from yourself and just survive for another day. So that's the biggest lesson I learned. I hope you guys were able to learn a whole lot of things from this trade review today. I don't know how long this is, but pretty sure it's probably going to be one of my longest trade reviews. But it's a lot of information, so I hope you guys picked up something on it. I'll be back tomorrow on Friday, September 29th, ready to run it back, make the right decisions, be patient, and follow my plan like I know I'm supposed to. So I'm excited for tomorrow. I'm ready to get to it, but I got some work to do before then. So I hope you guys learned a lot. I'll be back, but until then, study hard and take it easy.